Hi, everyone, and welcome to this week's weekly coaching webinar. As you can tell, I am not Ty Crandall. I have the wonderful opportunity today to host the weekly coaching webinar. Ty is off at a conference and tackling wonderful things, and so I get the opportunity to be with you all here today. Thank you for having me. We're going to have a great webinar. I'm excited. I've been doing a lot of research and learning and talking with my teams and gathering information, and I have a lot of great information to share with you guys. So thank you so much for coming, and it should be a great webinar. Housekeeping items. This webinar is of course recorded. We'll get that out on YouTube and out to everyone via email. I find when I learn something new or when I hear something, I have to listen to it 2 or 3 times before it really sticks with me. And so once you listen to this, I think it's great to play it back again and see if there's anything more in there that you could learn. The other items, if you have any questions, feel free to put them in chat, and I would love to answer questions. Another item, if you have any audio issues or you can't see my screen, feel free to let me know. And that way I can make adjustments on my end and make sure this is the best webinar possible for all of you. Now, I am Megan Christensen. I am the Chief Operations Officer for Credit Suite. Many of you may not know my name in that I'm often in the background creating software and training team members and creating the structure that is Credit Suite. So while you may not know my name, you definitely use our products, or you have interacted with our company, and I contribute in that way. So that's who I am. I have been working in the business credit space for over a decade, 10 years, and I started my career as a lender, as a small business lender, and worked in the banking industry for quite some time before deciding it was time for me to cross over and help business owners prepare for financing and get the tools they needed to get the financing they needed to survive and to thrive. So that's who I am. I will tell you, as I pondered what topic I wanted to share today, I debated on what would be most helpful to everybody. And we look like we've got some technical difficulties. There we go. And as I thought about it, something that I do regularly, I fly throughout the country and I speak to groups of business owners at various conferences. Last year, I did over 17 conferences all over the country. I was in Atlanta, I was in Sacramento, California, I was in Seattle, I was in Florida and New York and Philadelphia. It was a wonderful year last year, and I'm continuing that trend this year. I fly all over the country and I get to speak to rooms full of business owners and teach them how to establish their business credit reports, or even, let's start at the beginning, that their businesses have business credit reports and how it can have a huge impact on their business, what they can do to build their business credit reports without their social security number, how to get the financing that they need, how to apply for financing correctly and to maximize their approvals, and so on. It's been an awesome adventure. And typically when I start, I like to lay the groundwork that I'm taking over a decade of experience, not including my banking experience, and then the thousands and hundreds of thousands of business owners that Credit Suite has consulted over the years, pulling all of that information and putting it into that time so that I can share with them all these things that other business owners have gone through, so that they can learn through it and maybe not make the same mistakes, not have to go through as hard of a learning curve. And so that's what I wanted to do today. I wanted to talk about, and this isn't something we get to talk about a lot, what are the latest business credit economic trends? You know, we are seeing an increased awareness of business credit. when I first started, very few business owners were even aware that they had business credit reports. And now more and more we have customers that come to us or contact us, unfortunately in a negative situation where they got declined because of their business credit reports, or they heard something, or they monitor their personal credit reports, and now they feel it's their responsibility to also monitor their business credit reports, but they're finding it operates so different from their personal credit reports, and they find they need a little help. So we are noticing a big increase in awareness of what business credit is, which has been really rewarding because we feel like Credit Suite is a big contributor to moving that needle, to providing that education, and to helping business owners get those tools they need. So as I pondered the concept for today, I wanted to discuss what are the latest business credit economic trends. Oftentimes I will run into other business credit experts, maybe outside of Credit Suite, that are still operating on historical business credit economic trends. And so I wanted to do this webinar to talk about what's really going on today. So again, this is Megan Christensen. You guys will be hanging out with me for an hour today as we go through this webinar. I'm here if you have any questions, and let's dive right in. So let's just ask a really general question. How is lending currently going? You know, it's such a basic question, but I wanted to really speak English today. Main Street is roaring, and I think we can all feel it, sense it. I love the excitement. You know, as I talk with these business owners, they are tackling wonderful and amazing things, and they have this confidence, and they're bootstrapping and they're doing various things, but the general trend for the economy, the consensus is that Main Street is roaring, small businesses are roaring, and we're feeling some confidence. We have innovation going on. We have big ideas that people are actually taking action on, which has been a lot of fun to see. So generally, the economy is doing well in this area. Another trend that we see right now, it's really a continuation, is that big data is still big. And what I mean by that is we live in a day and age where technology is prevalent, where we have access to fantastic technology, and we have a lot of data. We're talking a lot of data. We talk about how things like Equifax goofs up, you know, and we have these huge data breaches. We have the more positive scenarios where we have these FinTech companies that are presenting these new forms of financing to the business owners. So big data is still extremely big. And I think one of the hurdles we have right now is how to make that big data more manageable. How do we sift through the data to find what we need? How do we find good data? How do we automate the review of data? But big data is still a really important factor right now. Another trend that we're currently seeing is that FinTech and traditional banks are still at war. Each of them have their slogan, and each of them have their place in the market. And we'll talk about how that war is going and what it looks like right now. But that has been one of the most exciting disruptors that we've experienced in quite a while as far as the lending market. And so we'll talk about that today, the FinTech and traditional bank war that's currently taking place and how that impacts business owners. So I already talked about Main Street is roaring, but let me give you a little more detail. Almost a third of business owners feel it's a great time to expand. It's the best market they've experienced in decades, is the general consensus. The reason that's important for us to know is that means that they're in an optimistic state. That means they want their business to grow. That means that they need the tools and resources in order to grow. And so it's important to understand the mindset currently on Main Street. Record levels of enthusiasm are tracked right now, and higher wages are reported for employees. So it's an increase of around 3%, which is higher than we've seen in a long time. So these data points are just some of my favorite. There's a lot more information on that. Unfortunately, we only get an hour today, but those were some of the big rocks that I wanted to bring up. Is we're seeing this enthusiasm, and it's important to understand how small business is feeling. And I think we're all there in small business too, and so we recognize this, but this is the current trend, and I think it's important to talk about it. I mentioned big data is big, but let's get into more detail. Over 50%, and this, I will tell you, when I speak or I consult with bigger companies, this detail is always shocking to the general business owner or consumer of financing. Over 50% of applications for financing are fraudulent or offer false information. I'm going to say that again so that it can concrete into your head. Over 50% of applications for financing are fraudulent or offer false information. And again, I just want a housekeeping item. If any of you can't see my screen, let me know. Go ahead and put that in the chat box and I'll get that adjusted. That is huge. I think a lot of times traditional banks will get a bad rap, meaning you never approve, you're so vague on the decline reasons, etc. But we all have that friend. I'll use this analogy. We all have that friend. When we see them, they kind of punch your shoulder. And so when you see them next time, you kind of cringe a little bit because you know what's coming. I personally love to be extremely active. I like to do backcountry skiing and snowboarding. I like doing cross-country motorcycle trips. And I'll tell you, I've had numerous little accidents here and there in which I've felt pain, and I've learned from those scenarios. Now, creditors have learned through these scenarios, and it creates this environment where they are nervous, and rightfully so. If you look at that, over 50% of the applications that are received, oh, I have wonderful people that are reporting they can't see the screen. Thank you so much. So I'm going to switch this over, and let me know if you still can't see it. So we have, over 50% of applications are fraudulent or provide false information. Therefore, they're nervous. They've been hit by that tree a few too many times. And this is why big data is so important. We have all this information to help them verify whether an application is fraudulent or offers false information. But the trick is, who can create these paths in which they can verify that information in a really streamlined way that allows them to know that an application has good information. And those tools are still being developed. Let's see. Still can't see them is what I'm getting a message in. And I have followed all the rules. So let's pause this showing of screen. I'm going to exit full screen. Sorry about the technical difficulties here, everyone. All right, let's see. Let's try it this way. Can somebody comment on if they can see this? Let's see if that does it any better. All right. Thank you, Alan, for commenting and helping me out with that. I am going to stay out of full screen just to make this a little simpler today, because I want you guys to be able to see these screens. I worked hard on them, right? It seems that GoToWebinar is having a hard time as I present these. So thank you for your patience. We'll do it this way, but I think you'll still be able to see that content. So over 50% of applications are fraudulent. And so with that, these lenders, you know, they're going to be careful and they want to make sure and verify that the information that they are receiving is not fraudulent. Now, it's interesting, as a lender, it was very common for somebody to fudge the numbers just a little bit. And I was shocked at that time, especially when I started, that most business owners did not feel that that was an issue. You know, a little bump in gross revenue or a little adjustment on the business address. I'm going to put my apartment address, but put a suite number so it looks like I have an actual physical business address, etc. Now, what I tried to do as a lender is help them understand that that was actually fraud, that they legally were breaking the rules. You know, that was fraud and they could be prosecuted. And people were prosecuted, especially during the recession, and still are, based on putting in that incorrect information. And so that is an issue because a lot of business owners aren't aware of that. Let's see, looks like no more. All right, so everybody can see the screen. Very good. And so that is an issue. And so one of the things that we work really hard to do here at Credit Suite is help educate business owners that by fudging numbers or falsifying information, that it's actually illegal and they can be prosecuted. So that's something to be very aware of. And that's why big data is so important. Anybody, any lender, any FinTech company is trying to decrease the cost of underwriting so that they can process more deals. And in order to do that, they have to be able to consume and find ways to verify all that data as quickly as possible. So let's move on. Let's talk about FinTech versus traditional banking. This is an all-out war with boxing gloves and more. It's been really interesting to see from a lender's point of view, these two box it out. And marketing has just done a fabulous job on the FinTech side, touting that business owners, they need an advocate and that the big bad traditional banks are beating them up. Now, I don't have a firm preference one way or another. I think marketing has done a fantastic job. I don't want to get into any political debates or anything like that, but FinTech has been a disruptor. They have come in and said there has to be more than one way to fund a business. And this traditional banking that's so heavily regulated can't be the only way. And so they have come in, and that has been a disruptor, which is so fun to see. There's still that FinTech traditional banking that's going on today. 100%, but this is an interesting stat, 100% of business owners still use traditional bank accounts and credit cards. But FinTech claims that traditional banks aren't serving the small business owners. That's a typo right there. And since we're not in full screen mode, why don't we just fix that on the fly? So they aren't serving the small business owners. So it's really interesting to watch statistically, but here's where FinTech has made a splash. 23% of business owners report not using traditional banking products, which seems small, but if you think about 10, 20 years ago, that number was zero, right? Because traditional banking was the main form of financing. So they really have been a disruptor, and they have brought financing to the masses, which has been a blast to see. FinTech, though, is finding out. They came out roaring, right? And they were the troublemakers. They were the brave companies that decided to go against big banks and provide additional ways for businesses to get financing. And those of you that aren't familiar with FinTech, what I'm referring to is your OnDex, your Cabbage, or Fundbox, these companies that thought outside of the traditional banking box and created a technical financial product that businesses could use to fund their business. So FinTech is finding out, though, they roared in, they came in extremely strong, but we have, and we currently do see a trend of them pulling back a little bit or changing the way they operate because they're finding out they really have to watch their margins as they operate in an area that most traditional lenders, they had deemed as not profitable. You know, you want to fund these startups. Do you want to fund these businesses that are fairly new, that are high risk, without a CFO, without financial statements? Those were all factors in which banks had said, hey, I ran into that wall too many times. They're too high risk. And because they're high risk, they're not profitable for us. And so banks, traditional lenders had deemed them as not profitable, but FinTech is operating in a world in which banks said, hey, this is not profitable. They went in roaring, but they found, hey, we really do have to actually watch our margins because it can get out of line. So we have seen a little bit of contracting or adjusting the way they operate to help increase margins. The next item in this all-out battle between FinTech and traditional banking is, of the business owners that haven't received any form of financing, over 87% of them state that they don't need financing or they're uneasy about getting financing. Now, one of my favorite analogies ever, I was in New York City. I was about to speak in an event, and in the cab ride over to the event, the host was with me, and she mentioned, I'm going to tell you, it's embarrassing to get a no, right? And it hit me, this analogy. She said, I get all these credit card offers mailed to me. I get a lot of them. And we have all seen those, right? We've seen a lot of them. And they get these credit card offers in, we do, our business owners do, the business owners we work with do, and everybody wants to offer us money. And we're pre-qualified. But here's the deal. It's almost like they're asking us to ask them on a date, but yet they're most likely going to tell us no. And that hurts. And we know that because we've learned that time and time again, right? And so she was expressing this to me, and this analogy came to me that that's exactly what's going on. These lenders will pre-qualify you, quote unquote, hey, ask me out on a date, apply for financing. And then ultimately they come back and say no, and that's humiliating. And a lot of our business owners feel that. And I think it stops them from applying for financing. And we see that statistically going on today. Even with the rise of FinTech, it has improved where business owners feel more of a connection to these kind of entrepreneurial FinTech companies that have been brave to take on the traditional banking model. But we're seeing that fear is still in place, where business owners are still uneasy. How do I apply? Where do I apply? How do I know I applied at the right place, etc. So that is a trend that we're currently still seeing with business owners, and it's something we need to understand as we work with them. There's these fears and that uneasiness to even express it, because as a business owner, you really do feel like you need to know everything. And that can be overwhelming when you don't know everything you need to know, especially when it comes to the financial part. I like to call that concept, that feeling, application paralysis. And this is prevalent. I mean, it's an actual statistic that is tracked, and it's really interesting. And I find that most business owners are in this phase or have been in this phase, and that it actually hurts their business, but yet we never talk about it. And application paralysis, it's this fear of getting declined, because getting told no is extremely hard for mankind. We don't like it. We avoid it at all costs. There's a whole book on it. There's many books on it. This fear of getting declined and getting told no. Fear that it's a bad decision to get into debt. You know, that is a real fear that most business owners are still wrestling with, even with the optimism that they feel right now in this economy, and fear that they can't invest the money to generate revenue, and lack of time to deal with the application, to get them everything they need. Once I apply, do I really want to jump through all these hoops? So lack of time is also a factor that prohibits business owners from getting financing and getting the financing that they need. Something that I do a lot of is, in talking with a business owner, I am an advocate of staying out of debt whenever possible, but then I also like to ask this question: if you had this funds, how much more revenue could you generate? And I think that's something, in fact, I just had this discussion with a team member today where he said, but I want to take on this task and I feel ownership over seeing it through. And we had to talk about, yes, but if you could use your time on something else, could you generate more value? Could you generate more revenue in the scenario that we're talking about today? So application paralysis is still real. It's a trend we see with business owners. It's interesting, isn't it? When we talk about the economic state of business credit, we're talking about these, the basic thought processes and the psychology that business owners are in, but yet that psychology has a direct impact on how business owners react and how they operate. All right, so let's get into the fun stuff. Business foundation. Now, this is something, whenever I speak, I always feel like I have to help business owners get on board here, because even on this webinar, I bet you that the responsiveness and the attentiveness declines here, because nobody wants to talk a lot about it. It's so boring. We talk about the Empire State Building, but we never talk about the foundation and who engineered the foundation. But yet, this is the biggest contributor to declined applications still today. And isn't that interesting? Why don't we like to talk about it? Because as entrepreneurs, we don't want to be bothered with the details. We want to get on to the fun stuff. So this, again, is important for us as we discuss the current economic trends of business financing, for us to understand that this is yet another component that is taking place that affects the psychology of a business owner and affects their actions. So the business foundation, most declined applications are a result of the business foundation. What in the world am I talking about? I mentioned the Empire State Building. We never talk about that foundation, but the engineering that went into the foundation of the Empire State Building is profound. That building needs to stand the test of time. It needs to withstand winds and the earth shaking and various things. And the reason that building can stand is because of its foundation. As if that building had no foundation, as soon as it incurred any hardship whatsoever, it would just topple over. We all understand this concept of a foundation, but when we really talk about executing it, it's very different. So I'm going to show you all what I am referring to, and we'll dive in. This is an interesting page. This is actually a gentleman that was prosecuted for falsifying on his business credit application. But that's not where I wanted to take you all. Let's go to what I'm referring to as the business foundation. This should look really familiar to all of you. And I'm going to bring up what this business foundation is. It's this step one. So what I'm expressing today, and this is something you all know, what I'm expressing today is that, hey, the business foundation is critical in helping a business get approved for financing, but yet in the economic trends discussion, I want to express that business owners are still hopping over these items. The business name, address, entity, phone number, 411 listing, website, email, EIN number, business license, bank account, merchant account, and making sure all those records match. So this foundation is still critical to a business getting approved. Why? You know, you can ask yourself that question, why? We talked about it. We talked about it back here. It's that big data, meaning 50% of applications for financing are fraudulent or offer false information, right? So lenders have run into this wall time and time again. So when a lender receives an application for the first time, what do you think they verify first? Do they want to spend all their time underwriting whether this company generates revenue or they can debt service or what their utilization percentages are? Or do you think they start with first off, is this a real company? Is this information they provided valid? And of course, it's extremely logical that they would start there. Is this business real? Is the information valid? Is this something that, you know, is this an application worthy of additional underwriting? And so that's where financing starts. It starts with this business foundation. It's overlooked all day long. I'll never forget working with a publicly traded company. They failed, and they are extremely successful, but yet when they needed a business credit card just for travel, etc., they were declined. Why were they declined? The business foundation, just the ability to verify the information. They had changed their business address, but didn't change it on the Secretary of State record. They had this other account that had reported at this other address, and things weren't matching, and it looked off, and it didn't even get past the computer, the automated underwriting. It got declined before it even made it to the real underwriting process. So it impacts business owners on a day-to-day basis, but yet it's boring, and business owners tend to not want to deal with it. They fast forward through it and they look for ways to get around it, but yet it's having a huge impact. And now we understand why. The creditor's first reaction is always to detect fraud. And businesses that have consistent business records, they drastically increase their ability to get approved. It's phenomenal. When I was a lender, I can't tell you how many times I requested tax returns and a copy of a business license simply because their Secretary of State business address didn't match the address that was on their business credit application. So I requested tax returns, which then meant I now was going to also verify income. And if that didn't match up, then they're out. So again, having all those records match up front, extremely important. It's step one. We often take it for granted, but I wanted to highlight it here as this is still a current economic trend that we see. Whenever I just got back from talking with one of our lenders, and this was the concept brought up. If only business owners they had expressed, if only business owners would come to us with the correct business information on their Secretary of State record that matched their IRS information for their EIN number and the information on their application and their business credit reports, then everything would be smooth sailing. And we were able to discuss how here at Credit Suite, that is something we work on, that step number one. And they really appreciated that and the impact that it has on business owners. And it has for our economy as a whole, you know, those businesses that really do qualify for the financing and that should be getting the financing, we don't want them to get caught in this net that is meant for this group, the 50%, over 50% of applicants that are providing false information and wrong information. We don't want them getting caught up in that net. There's no reason they need to be in that net. A lot of business owners that really should be getting financing are getting caught in this net still today. Okay, other trends that we're currently seeing that I wanted to discuss. This is a bit of a catch-all, but I thought it would be useful to go over. So taking ownership over the business's financial standing, this trend has been ongoing for a long time because running a business is overwhelming, but yet we need to still talk about it because it is part of what impacts these economic trends, because it's part of this psychology and that's going on in the business owner's head. So bookkeeping, this was brought up as I was talking with these FinTech companies. You know, traditional banks have found that companies without bookkeepers or without somebody to manage their financials, they tend to fail on payments more regularly. And why is that? So that is a long-standing trend that they have seen. And so FinTech has talked about, well, how do we pull that data into our underwriting decision? And there's companies like Fundbox or other companies out there that integrate with the accounting software that help them verify that data point, right? That's one of the values in this FinTech and the cool innovation they come up with. So something for business owners to watch and be aware of is if they have some form of bookkeeping, some form of way to keep track of their expenses, their probability of succeeding increases, and lenders have seen that trend too. Another big factor that's still prevalent in the market today is keeping the business and the personal credit separate. I like to use the analogy that there's two sidewalks, and those of you that have heard me speak know this analogy. Basically, on the left-hand side, we have our regular sidewalk that's gray, and we're all really comfortable walking on it. We've walked on it all our lives, and we're used to it. But then on the other side of the street is this sidewalk that's painted blue. And oddly enough, nobody wants to walk on it because it's scary and it's different because it's blue. And that is what I will call the business finance side. So we've got this gray sidewalk and we're all used to walking on it. We got our personal credit cards when we were kids. You know, we use that to purchase our cars. We've got to know mortgages and personal credit reports. But on the other side is this business credit sidewalk, and we still see this trend where a majority of business owners are not separating, small business owners are not separating the business and the personal side. So this still has a big impact on business owners today. The next item I had on this list that I wanted to discuss today is understanding the business financial products. It's daunting and overwhelming. And I think as you all hear me go through this presentation, it's probably bringing up some of those thoughts. Even those that are gurus, you know, the more information that we pour in, the more we realize there's more we don't know. And so understanding these business financial products and having a base financial literacy or having an advocate that knows that information is critical to running a business. And I feel like at Credit Suite, that is the value, value that we offer, where we have that business financial literacy, where we can help be the advocate for the business owner, where they can continue to be the professional in the area that they are in, but we can help in the area that we are professionals in, which is we understand business credit. We're in this space. We're tracking the economic trends. We're seeing what lenders are approving, declining. We know what kind of items need to be in that business foundation. I'll tell you that foundation, step one, continues to modify and change. And that's because we're watching the trends, we're watching lenders, and we're looking to understand what lenders are looking for to help our business owners get get approved. Those business owners that should be getting approved, make sure they have everything in order to prevent the silly declines. So understanding the business financial products and understanding that they're different, that there are two sidewalks, it's still, though we've moved the needle, it's still something that business owners are mashing business and personal together, which can really hurt them. And we see that as they apply for financing. A story that illustrates that well, I've consulted thousands of business owners over the past decade, and each of them has a place in my heart, right, where I just love what they're doing, and I'm excited to see if they can make it work and give them all the tools I can to help make it work. There was a company in Portland, and they are still in business. So they are doing these healthy meals, and they deliver them throughout the area. And this company had grown so quickly. They were so savvy at what they were doing that some things got away from them. And they ran out of oven space. They needed more ovens. And they ran out of freezer room and refrigerator room. These things that they thought there's no way. They were growing so fast that they grew out of that space. And so the business owner came to me, and as I think this is a skill that most entrepreneurs have, he had exhausted everything he knew to exhaust. To solve this problem on his own, right? The first things out of his mouth was, listen, I've done everything I can. I took out my home equity, maxed out my credit cards. I took everything out of savings. I used my retirement. I borrowed from friends and family, and I still need a little more financing. I just need another $100,000 to make this work. Now, when I heard that, and I think we've all run into that, and or many business owners have been in that space, when I heard that, my heart sank a bit, because this is what happened. He didn't separate business and personal. This is a trend we still see today, where business owners start where they feel comfortable. They start on the comfy gray sidewalk and forget to walk on the blue one first. By leveraging everything he had on the personal side, my hands were tied to a point. And all that was left was this really expensive financing because he had leveraged everything else that put all the business debt on him personally. And so by having all that debt on him as an individual, it locked down his options. And I was able to get him this higher cost financing, and we used that financing to actually readjust all that the business financing that was on the personal side onto the business, so that he as an individual was a lot stronger, and to open up additional finance doors. And so again, this is a trend we still see and experience. And this is something that's still impacting business owners in their ability to get financing. Understanding those business financial products. I feel like every other week there's a new FinTech product, right? And somebody that's found a way to search this big data to underwrite somebody more effectively and efficiently. And so how do you know you applied for the right finance product? And how do you know that product is going to give you more financing than the one next door? So understanding those, and Credit Suite can be a great advocate there. I just got a text from a client that my team had serviced, and he was just singing their praises in that he had got all the business credit cards he knew how to get. He at least knew not to blend personal and business, but he had reached a roadblock, and he had done all this online searching, spent hours and hours and hours, and didn't know what to do next. And I was so thankful my team was able to step in, and he did. He got another $149,000 and to help his business, which he exceeded what he needed and what he felt he could get, and unlocked a lot more options for him. And hopefully, my hope is that means he will grow at an even faster pace, that he'll be able to employ more people and do greater things. So with that, we still see this trend where business owners aren't quite sure how or when to use a personal guarantee. And we all know that there are some lenders that will always ask for a personal guarantee, but how or when do you use that and how to use it correctly? So we're still seeing that trend and it's still prevalent. I do still hear a lot of, well, can I just, ask them to remove my personal guarantee in the future? We still hear a lot of that. And unfortunately, the answer to that is no. You have to be, you get re-underwritten when you do that. So you can't just have your personal guarantee removed. I get lots of questions regarding vendors or creditors that always require a personal guarantee. Well, can I apply without it? And there's still those accounts that require it. And so that is still a trend that we're running into in this space that we see with business owners. And of course, education is how they can overcome that. Now, last but certainly not least in this, and I urge everybody to go ahead and start writing out some questions you have, because we'll have a little bit of time for Q&A. Today, again, my focus has been to talk about the current economic trends in the business finance space. And with just an hour, I was able to scratch the surface on many of these topics. But if you have any specific questions, I would love to answer them. Okay, so the last but not least is managing your cash flow by leveraging vendor accounts. I was speaking, it was rough. I tell you, I had to go to Hawaii to speak, right? And so I was in Oahu and I was walking through this room, this huge conference room full of business owners from Hawaii. And the best part about going to Hawaii to speak is everybody shows up in their professional Hawaiian shirts with flip-flops. I mean, that's just fabulous. And so I was speaking about the vendors, these Best Buy cards and Amazon and Home Depot, etc. And as I walked them through it, I took the time to explain that business owners can get approved for a business credit card with Home Depot or with Staples, and they can use these business credit accounts to fund their business and to help their cash flow. And I had a gentleman in the back who ran a gas station, and he raised his hand, and it was almost like I could see the epiphany look in his eyes, which is one of my favorite looks when I'm teaching because it means I got through. And so he raised his hand and he said, "So you're trying to tell me that I personally am on the line for every form of financing that my business has ever received?" And you could see the epiphany / unfortunately, a little bit of fear in his eyes, not that he was planning on going under, but that he had been in business long enough to know that the economy goes up and it goes down and there are risks involved. And he is now excited to understand what vendor accounts are, to move as many expenses as he can from the business accounts with a personal guarantee or those personal credit cards, move those accounts to be under the business only to help manage his cash flow and push that business debt onto the business and help balance out that risk that he took as a business owner. I tell you, that was such a rewarding experience. And so that is another trend we still see. As I was in that room, he was not the only one that brought up that kind of scenario. Still a trend that's prevalent where not all business owners realize, hey, I can use these vendor accounts. At first, they may seem boring, right? I came to you for a $50,000 line of credit. I don't want a vendor account with Home Depot. But when we start to talk about, well, if you're in a real estate investing company, you could purchase your appliances and then you don't need that line of credit to help pay for your appliances, you can use your vendor account. Or you could use that vendor account and use the money you have in your bank account to invest in another product. So it's seeing how that vendor credit can be a puzzle piece that helps them succeed. And so that is another component and trend that we currently see that's still prevalent, is this only seeing it's an Apple business account. I don't see how that helps my perceived need that I need a business line of credit. And by helping them see that they have day-to-day expenses, they can be under the business credit only, and they can leave that cash in their account to do other things to build the business further. Another angle to that is, who doesn't want to buy a car based on their business credit only? That always seems like a great idea, right? And as they establish those business credit reports, the impact is profound. FICO SBSS is a big part of the underwriting that takes place for almost all credit cards, lines of credit, loans. Even, banks are pulling the business credit reports now. Over 90% of them are. And it's just the world that we are now in. And so for business owners to be aware of that is really important. So those are the current trends we're seeing, especially as I'm out consulting, as I'm out in the space talking with lenders, as I'm working with partners all over and within the company. Those are the economic trends that we are seeing in the business credit space. I hope that was helpful to get some updates on how that works. So this is a good time for questions, and I have one that came in here. So that ideally a corporation is formed and should not offer personal credit to get it going. He has great personal credit. This is a good question. And so he's saying, I have a corporation and I understand that I should not offer my personal credit to get it going, that the credit should be built totally on the corporate existence. How old must it be? And how much income must it have, assuming the address is correct, and so forth? I love this question. Thank you so much for sending that in, Alan. As I speak throughout the country, I will tell you, when they hear the phrase business credit, and Alan, I'm going to get to your question. I'm just kind of setting the premise and foundation to it. Immediately, the perception is that in order to establish business credit, I have to be well established. I have to have a lot of revenue, and it's only for big companies, right? Those are some of the hurdles automatically that just pop into the mind. And so let's go through your questions here. You can be a startup and establish your business credit reports. And I'm not just saying that, that is reality. There are some vendors that like to see that you have some time in business, but there are others that don't care. And so I would tell you, you can be a startup and start to establish your business credit history without a personal guarantee. How old must it be? I just answered that question. How much income? That varies according to vendor, but again, some vendors like to see substantial income, others they don't. And so it's combing through those vendors that do report and approve a business with no personal guarantee, and using those that are the best fit for you and your business. I will promise you that just like when you got your first personal credit card, remember, when we all got our first personal credit card, we had little to no personal credit history. And of course, that card wasn't amazing. It usually has a $100, $200 approval. It's not large, and it's not maybe the most useful account to us then. But when we started to establish our personal credit, the approvals get higher and higher. The wonderful thing about business credit is that you can establish your business credit reports in 6 months. Whereas on the personal credit side, whenever I ask how long does it take, people just laugh. It's 5 to 10 years and it's ongoing forever and ever. And though you can continue to build your business credit, you can have a strong business credit report that can do about anything within 6 months. So I tell business owners, if you need money right away and a large amount, let's use that personal guarantee wisely so it goes the distance for you. But on the credit that can be approved without a personal guarantee, let's do it that way. Keep the debt off of you as an individual so that you can start to build strength on the business credit side. So then in 2 years, you can call me and say, hey, I just bought my new BMW based on my business credit only. And we can celebrate together that you're keeping your business and personal credit separate. So Alan, I hope I helped answer that question. I probably went into more detail than you even asked for, but I'm here. You can follow up with me or my team after the webinar if you need more detail. Any other questions out there? I got a great thumbs up from Alan. So any other questions out there, please go ahead and submit those right away. Let's see, I've got another one from Patrick. What's needed to qualify for a commercial vehicle loan? Oh man, don't we wish so when I teach my business credit class, it's a 6-hour class, right? We would need a lot more time to go through that, but basically, it's not that it's complicated, but to get a commercial vehicle loan, it depends what kind of commercial vehicle loan, but let's say you just wanted to buy a passenger car based on your business credit only. Usually you have to be in business 2 to 3 years and have about 10 trade accounts reporting in order to qualify, which is something we can usually do, I'm going to say 6 to 9 months, depending on how quickly we work through the steps. Great question, Patrick. Thank you for submitting that. Keep those questions coming in. If you have any, or definitely you can see on here, you can reach out to Credit Suite, info@creditsuite.com. There's our phone number. Again, I tried to cram in as much knowledge as I could as to the economic trends that we are still experiencing and we're currently seeing in the business credit space. Here at Credit Suite, our vision is always to be an advocate for our business owners to help them get the experience and knowledge that's come from consulting thousands and thousands of business owners every year. We've consulted well over hundreds of thousands of business owners over the life of the business, and it's a joy. You know, I can think of so many great successes and because of the knowledge that that experience brings to help shorten that learning curve. I mean, running a business is already challenging enough, right? So a business owner can focus on what they are fantastic at and get those advocates where they need that help. So anyway, it was a joy being here with you today and hosting this weekly coaching webinar. I hope you enjoyed just brushing up on those current economic trends in the business credit space and getting kind of that thought process, the walking in the shoes of the lender. My challenge to everybody is to talk to the business owners around you and share the information that you learned today. My other challenge to you is to always look to walk on the blue sidewalk first. You know, finance your business using the business side and then incorporating the personal side strategically when it makes the most sense for the business. So those are my challenges to all of you. Credit Suite is always here to help. Thank you so much for joining us. Your support and your questions are always much appreciated. Everybody have a wonderful day and let's make it a great week. Take care, everyone.